Tokenization and Real-World Assets. Episode 1. Why the world is moving to tokenized real-world assets. If you think crypto is just about memes, speculation, or hype cycles, stop right here. Because the biggest financial transformation of the next decade won't come from Bitcoin, Ethereum, or the next trending blockchain narrative. It's coming from something much bigger, bringing trillions of dollars in real-world assets into the digital economy. This is what tokenized real-world assets, or RWA, are about. And whether you are an investor, a builder, or just someone trying to understand where money is going, this is the moment to pay attention. What are real-world assets, and why tokenize them? Real-world assets are exactly what the name suggests, assets that already exist in the traditional economy. Think about government bonds, real estate, corporate debt, commodities like gold, private credit and loans. Today, these assets represent hundreds of trillions of dollars globally, but they are slow to trade, expensive to access, limited to certain investors, dependent on outdated infrastructure. Tokenization doesn't change what these assets are. It changes how they move, settle, and are accessed. Tokenization means representing a real-world asset as a digital token on a blockchain, with clear ownership, programmable rules, and near-instant settlement. Same asset, new rails. Why this is happening now, and not 10 years ago? This shift is not ideological. It's practical. Three forces are converging at the same time. Financial infrastructure is outdated. Many global markets still operate on systems built decades ago. Settlement can take days, reconciliation is manual, and costs are high. Blockchain infrastructure has matured. Institutions now have permissioned blockchains, custody solutions, compliance tools, and standards like ISO 20022 aligning traditional finance with digital rails. Institutions want efficiency, not ideology. Banks, asset managers, and governments are not trying to go crypto. They are trying to reduce friction, improve liquidity, and lower costs. Tokenization does exactly that. This is not a retail experiment. A critical point, tokenized RWA is not driven by retail investors. It's being pushed by global banks, asset managers, central banks, financial market infrastructures. For example, BlackRock has publicly stated that tokenization is the next step for capital markets. JP Morgan runs blockchain-based settlement through its Onyx platform. Franklin Templeton has tokenized money market funds on public blockchains. This is not a theory, this is already happening, quietly and institutionally. What tokenization actually fixes? Tokenized real-world assets introduce concrete improvements: faster settlement, minutes instead of days, lower costs, fewer intermediaries, fractional ownership, access for smaller investors, 24/7 markets, no banking hours, programmability, rules embedded directly into the asset. Imagine buying exposure to assets that were previously locked behind minimum tickets of millions, and now all will be accessible, auditable, and liquid. That's the promise institutions care about. Why RWA is becoming the core crypto narrative. For years, crypto searched for a use case that moved real money, involved real institutions, solved real problems. RWA does all three. This is why capital is flowing away from purely speculative narratives and toward tokenized versions of assets that already move the global economy. The question is no longer if real-world assets will be tokenized. The question is which assets come first. And the answer is clear: government bonds. If you want to start tokenizing the global financial system, you don't begin with complex assets. You begin with the most trusted, liquid, and standardized instruments in the world. That's why the first major wave of RWA adoption is happening around tokenized government securities, especially US Treasuries. Short-term, low-risk, highly liquid instruments are the perfect entry point for institutions testing blockchain-based finance. And that is exactly where the next chapter takes us. What comes next? In Chapter 2, we'll focus on the backbone of this entire movement, tokenized treasuries. We'll look at why governments and asset managers started there, how tokenized T-bills already work today, who is issuing them, and why this market is growing faster than any other RWA segment. Subscribe now and join the journey if you want to understand where institutional money is actually moving, not what Twitter talks about. Don't miss the next episode.